Good day, and welcome to your financial news update for the 2nd of January, 2024, bringing you the latest from the world of markets and major headlines that could impact your investments. But before we dive in, if you find value in the content we're sharing today, don't forget to hit that like button. It helps us keep you informed. Now, let's get to the headlines. Starting on Wall Street, it was a rocky opening as US stocks took a tumble on Tuesday. The cautious sentiment from global markets persisted, fueled by rising bond yields and a decline in Apple shares. The Dow Jones Industrial Average slipped by 0.33%, the S&P 500 dropped 0.52%, and the Nasdaq Composite experienced a 0.92% dip. The Dow Jones Industrial Average seems poised to break its 5-day winning streak, marking a subdued start to the new year. Investors are treading cautiously amid concerns about interest rates, inflation, and geopolitical tensions. However, across the pond in Europe, there's a glimmer of optimism. European markets outperformed their US counterparts, with the Euro Stoxx 50 index closing higher. Investors found hope in expectations of slower interest rate hikes in the Eurozone. Now, let's dive into the major headlines shaping today's financial landscape. In a significant shift in the global electric vehicle (EV) landscape, Tesla, despite delivering an impressive 485,000 electric vehicles in Q for 2023, has been dethroned by China's BYD as the world's top EV manufacturer. BYD's delivery of 539,000 EVs signifies a seismic shift. On the tech front, Apple shares took a hit on Tuesday, dragging down the Nasdaq. However, the day saw mixed results for the tech sector, with other players like Lyft and Fisker experiencing significant gains. In economic news, headline inflation unexpectedly showed signs of slowing down in December 2023, offering a glimmer of hope. Yet, underlying inflation remains high, and central banks are signaling a shift towards a more measured approach to monetary policy, introducing an element of uncertainty. Turning to additional news, oil prices climbed on Tuesday after Iran rejected calls to end its support for Houthi rebels in Yemen. This raised concerns about potential disruptions to global oil supplies. In the housing market, UK house prices dipped by 1.8% in 2023, with further declines expected as mortgage rates remain high. Before we wrap up, remember, the financial landscape is constantly evolving. Stay informed by checking reputable sources regularly and make informed investment decisions based on your own risk tolerance and financial goals. If you found this update valuable, consider subscribing for more insightful updates, and don't forget to hit the like button.